much. And now, after IDFC, now it's time for inviting speaker from IDBI Bank, which is not working quite closely like a private bank, and Executive Director of IDBI Bank is with us, Mr. SKV Srinivasan. I request sir to please address, and a round of applause for Mr. Srinivasan, please.
A very good morning to all of you. At the outset, I thank the organizer Elites for giving me the forum to be present among the distinguished dignitaries on the dais. I think most of the thing about digital banking has already been told. I don't have much to say, but nevertheless, I thought I would articulate what digital banking means for IDBI Bank. As the introducers recently told, that we were a private bank and we became a public sector bank post-merger with IDBI, and further forward we really do not know whether it will remain private or will be a government bank. But that apart, the important point is that technology was already imbibed in the culture of this bank right ab initio, because it had that private sector beginning. More than that, I think we have imbibed the current technology and also the processes which come with the technology much more easier, because the working people in this bank, average age is about 30 or 32, and we are the people who are actually bringing down the average age. Okay, so adoption has been much quicker. We look to digital banking to improve three critical areas. One is the fact that you all know that all traditional banks are today saddled with three issues. One is declining margins. Second is additional provisions which are required on account of mounting NPAs. And third is how to sustain the bank operations through infusion of capital, particularly due to Basel III implementation. In all the three areas, I think this digital banking will come into play in a very large measure. One is, I think, when we adopt digital banking, and more pertinently into reaching to the people and making people use more of this channel rather than the traditional channel, the cost of operation for the bank certainly comes down. So we are keeping a track of how essentially the cost of operation is coming down vis-a-vis our adoption of this alternate channel and adoption of the digital banking. We have very clear performance metrics with measures, and we are very clearly focused on adopting this more and more in order that operational efficiency is increased. Second is, I think, the days of brick and mortar banking and ATMs will certainly not be as much important as we migrate towards more of digital banking, though it will not entirely replace digital banking. And therefore we are very clear that while we expanded about 700-800 branches over the period of last 3 years, which was a huge addition to our infrastructure cost and operating cost, we would now taper down our branch expansion and we will concentrate more on digital transformation. We have been largely a corporate bank, but we largely built our retail bank over the period of last 3 years, in as much as now retail assets constitute about 34% of our overall lending. And in the process of transformation, what we realized was that if we are in a position to make digital delivery of loans, small ticket loans, there is a huge market for that. And the delinquency in large small ticket loans is also considerably less. So if we are in a position to create a platform in terms of which, right from tracking the application to sanction, disbursement, post-sanction, follow-up, monitoring, if we are in a position to digitize, which is what we are presently on, we would be in a position to substantially build the small ticket cases. Why typically bank doesn't do small ticket loans or reluctant to do small ticket loans? It is primarily because of the fact that the credit assessment is difficult, number one, and number two is even when it is parameterized, it is difficult. And second one is the fact that there is a huge cost of operating this small ticket loan. If you have to disburse a 10,000 rupees loan, ultimately the cost of originating that loan and operating that loan may be even 2,500 rupees or 3,000 rupees today. That is the cost structure today. But if I am in a position to digitize this and bring down this cost substantially, I would be able to build substantial volume in this in a risk-contained manner, and that is how we are looking at it. As the previous speaker has said, the presence of Aadhaar, the presence of unified payment system, the presence of the fact that the customer identity is now not an issue as it was existing about maybe a few years ago. It all converges to a point that doing a small ticket loan is much becoming easier than it was about 5 years ago. And even in the scheme of things of the government, it is the small ticket loans which are getting predominantly important, because these are the people who actually will deliver value out of these loans and will be able to generate a GDP growth which will be widely dispersed, and that is what the country needs today, right? So these are our objectives in terms of how we use our digital banking, how we view our digital banking initiatives, and where we aim to achieve, where we aim to reach through digital banking strategies. Thank you.